I'm going to give you guys a very brief primer into Bitcoin. And 90 minutes for Bitcoin is something extremely brief. And I say this to you as somebody that spent thousands of hours studying Bitcoin, and I still don't know anything about Bitcoin. So, and I know a lot about Bitcoin, and I still don't know anything about Bitcoin. So this will be a journey in 5 acts, and you'll find with Bitcoin, it's not just a journey of the pocketbook or the bank balance. It's also a journey of the soul. So that sounds like a big statement to come out with. But hopefully you're sold on that statement in 89 minutes time. So the first act will be 21 easy to digest facts about Bitcoin. The second act will be about money and the concept of scarcity. The third act will be why Bitcoin is the money of the people. The fifth act is I'll be using an analogy and comparing Bitcoin to a startup company. So if anybody here has experience in VC or startups or anything like that, maybe that'll help you understand Bitcoin in a different light. And finally, we get to the investment and securing part. So I'll only really be talking about wealth building strategies and all of that for maybe about 7 minutes of the whole presentation. But with that said, my goals for this weekend is everybody here leaves with enough knowledge of Bitcoin's technical, economic, and social aspects to be able to give them more confidence in investing. Not, Bitcoin's been going up, might seem like a good thing. How about I buy some? I hate it when I hear stories like that. I usually do prefer it when somebody has, the more knowledge you have about Bitcoin, the more comfortable you'll be increasing its percentage in your portfolio. So the goal is for everyone here by the end of the weekend to get off zero if you're not already on zero. So who's currently on zero when it comes to crypto and Bitcoin? Actually, not that many actually. So hopefully by the end of today, I can get you guys off zero. And I'll also go through the exercise of downloading a mobile wallet, and I'll give you a couple of suggestions about the good wallets options that are out there. So about me, doesn't really matter who I am, just what matters is the message. But to give you an idea of who I am, I've got a Bachelor of Civil Structural Engineering, a Masters of Civil Engineering, and an MBA from Oxford. And it was my experience and time in Oxford 6 years ago that really pushed me towards what Bitcoin can do as a social movement. And then the more and more I found out about it and studied economics and technology, I see it as a triple bottom line movement. So let's get into the first act. 21 facts about Bitcoin. Fact number 1, Bitcoin is a get poor quick scheme, not a get rich quick scheme. So tread very wisely. Don't try timing the market or any of that kind of stuff. Invest in education first. The more educated you are, the more you'll be able to assess your risk for getting into Bitcoin. Fact number 2. Bitcoin was created 11 years ago by a person or a group of people called Satoshi Nakamoto, using a pseudonymous name. Bitcoin with a capital B is the monetary system. Bitcoin with a lowercase b is its currency. So that's already a big part of the confusion around Bitcoin. So everything in Bitcoin is Bitcoin. Bitcoin, the system is Bitcoin. Bitcoin, the money is Bitcoin, so on and so forth. But with that said, there'll only ever be 21 million Bitcoins. That's the rule baked in to the code. Don't worry though, every Bitcoin can currently be split into 100 million Satoshis, which is the base unit of Bitcoin. And at $1 million a Bitcoin, one Satoshi will have the same purchasing power as a cent. So at a higher Bitcoin price, we can add decimals if need be, but we probably won't need to do that for 10 to 20 years. Yeah, there's bold, making the claim that Bitcoin will be $1 million in 10 years. Fact 5. So it's estimated that out of these 21 million, 2 to 4 million are already gone. They're lost. They're no longer accessible. By lost, I mean the private key to the Bitcoin safe has been lost, so the safe can no longer be cracked. And we'll talk about more about safes and safe cracking in a couple of slides. So blockchain technology is just a buzzword, right? Bitcoin's the only important blockchain. It's the only thing that has, use in terms of censorship resistance, scarcity, hardness of money, salability, and the like. So beware of the term blockchain and do your own research before you venture down that road. Fact 7, okay, Bitcoin. So all of your Bitcoin are stored in the blockchain, right? And imagine every address on the Bitcoin is simply a safe. So these are your public keys. So everyone knows whose safe it is. But because Bitcoin's pseudonymous, you can't put a name to the safe. So the person that owns this is 3AXT, and like a string of 24 letters and numbers. And then you have your private keys, which are your personal key, which will open up your safe and be able to pull money out of it. But if you lose your keys, you've lost your Bitcoin. The blockchain is literally a sequential chain of transaction batches known as blocks. So you have a block of data, and within this block is all transaction data. And new blocks are added to the chain or mined every 10 minutes. So when you hear about Bitcoin mining, it means the production of blocks, batching the transaction in a block and stamping it in the blockchain. So once it's stamped in time in the blockchain, can't be changed or modified. It's there forever, which also means finality of transactions. So if you send money to someone by accident, can't be changed. That's it. It's unidirectional payment. So literally digital cash. You leave cash on a table. You shouldn't really expect to come back and find it when you come back to the room a couple of hours later. So this stamping effort also needs a lot of energy, and we'll talk about energy a little later. And for the use of this energy, miners are rewarded with a block reward and all transaction fees within that block. So the block reward is the process of minting not minting new Bitcoins, discovering part of the 21 million that are slated to exist. So fact 9. So in Bitcoin, time is also measured in blocks. So you don't really talk about, it's going to need 14 days for something to happen. You say it's going to need 2016 blocks. And I'll talk more about these specific numbers, 2016 and 210,000, shortly. So this 4-year period is known as a reward era. Right, so how much Bitcoin you're rewarded for mining each block. And at the end of the era, the block reward halves. So the inflation gets lower and lower. So this is a Bitcoin supply versus the block reward. So in the first 210,000 blocks, the reward was 50 Bitcoin. And at the end of the first reward era, there was 10.5 million Bitcoin. Reward half to 25, then to 12.5. We're currently in this third era, about here. So in April, May, it halves again. And as you can notice, it's very high inflation, and then it tapers out. And here in the year 2036, you see that there's only 160,000 Bitcoin left to mine. It'll take until the year 2140 to mine these last 100-odd thousand. And then from there, there's no more block reward. The miners are purely incentivized with transaction fees. So the main characters in the Bitcoin ecosystem are the miners, the nodes, and the users. And we'll talk about each of these characters next. So the nodes enforce the rules of the protocol and verify all the transactions. And they also define what a miner actually is. So the miners produce blocks and effectively secure the network. And they secure it with a lot of power. The users are anyone who uses Bitcoin. And users can also be miners, and they can also be nodes. Anyone is free to run a node, or to try to mine. Although like mining is very, very difficult these days. So another analogy you could make was back in '09, you could pan for gold, and to get gold out of the ground now, you need to be BHP. Very similar thing with the evolution of Bitcoin mining technology over the past decade. Anyone with a substantial amount of Bitcoin should consider running a node, and a lot of this discussion will be centered around nodes and sovereignty and being your own bank. So don't worry about too much about what a node is right now. We're going to go thoroughly into what a node is. Fact 12. So the network is currently secured by more computing power than the top 10 supercomputers in the world. So 200 times more than the top 10 combined. And these supercomputers cost tens of millions of dollars. So if you were to add all of these supercomputers up and try to build 200 of them like immediately in a day, it'd still cost you billions and billions of dollars to try to attack the Bitcoin network, and you'd probably only sustain an attack maybe for 2 or 3 hours. So this computational power is known as the network hash rate, and it's been growing by about 6% every fortnight, relentlessly for a decade. And there you'll see, so everything in Bitcoin, also you can't view Bitcoin linearly. It's an exponential technology, and to that end, everything must be plotted in a log scale. So the white line is the network hash rate, and the yellow line is the price. And you'll notice that Bitcoin was being mined for a good year and a half before it even started trading. So it was really, for this time period, a game amongst nerds in that first year and a half. They broke a lot of things. In that time period, somebody exposed the bug that created 18 billion Bitcoin out of thin air. But since there was only 20 people using it, and it didn't really have a price or anything, they're like, all right, let's just patch this one up, rewind the chain for a couple of hours and move forward. So in Bitcoin's history, it's had 99.98% uptime, and the downtime that Bitcoin had was during this Stack Overflow bug somewhere in here. So it's a pretty resilient system. And as you can see, price also is logarithmic. Now, if you were to view Bitcoin's price in linear scale, it'd look like this. But when you view it in log, it's volatile, but has upward volatility non-stop. So this level of security, this computing power, is needed for unforgeable costliness. Now, what unforgeable costliness means is that it's so expensive to forge a Bitcoin that it's just economically unviable. So Bitcoin does use a lot of energy, but let's have a look at the context. So a lot of people say, yeah, Bitcoin uses more power than Ireland, but come on, it's Ireland, who cares? Look at, right? So if Bitcoin uses more than Ireland, where does Ireland sit in the scheme of the world's power? Nowhere, it's a minnow. So every year the world produces about 160,000 terawatt hours of primary energy supply. 50,000 of that is wasted, and that 50,000 alone of waste energy could power Bitcoin over 2,000 times today. And already a lot of mining containers are being sent out to coal and fracking mines and natural gas mines, because in all of those processes you need to flare methane. So anytime you go or see a mine on TV, you'll notice that there's a flame flaring something off. And that's because it's better for the environment to burn methane than to just let it release altogether. So people are connecting this flared gas up to Bitcoin mining rigs and mining off flared gas. And it can also be used to capture any stranded energy assets. So if you had a solar farm out in the desert, you could just bring the power use to it, and the energy company can make some good money. And also further, don't worry too much, Bitcoin runs on the grid. So if it's running on a grid that's powered by renewables, Bitcoin has no emissions. And in 10 to 15 years, with the way renewable costs are looking, it'll be completely economically unviable to mine with coal, even in China. So in China, hydro is starting to beat coal on a price per kilowatt. And also the Three Gorges Dam in China produces more energy than Bitcoin needs. So that's just one hydro plant. Fact 14. The concept of network difficulty ensures that blocks aren't mined too quickly. So we're trying to target blocks coming out every 10 minutes or so. So every 2016 blocks, the network checks back into the past 2016 blocks and sees how quickly the average block time is. So if the average time is less than 10 minutes, that means more miners have come in and they're able to solve the computational problem quicker. So the network difficulty is increased to retarget 10 minutes. Otherwise, the opposite is true. So it's all very self-regulating. There's lots of very tasty technical details in there, and Satoshi, it would appear, has covered all of the bases in thinking of this system they designed. Fact 15. So Bitcoin is simply a root layer protocol, and like other layer 2 solutions can be built on top of it. So this isn't very different to like the TCP/IP stack that we know about the internet. And you have UDP, FTP. So all of these are protocols. Now currently, there's a new protocol that's been added to the Bitcoin stack. It's called the Lightning Network. So now you have an LMP BP stack where Lightning functions on top of Bitcoin. Now Lightning can theoretically do 1 million transactions per second, but it just needs to develop liquidity and channels. Lightning is still in beta, so give it another year or year and a half and it'll be ready for prime time. Now you also have side chains that are layer 2 but don't act as a stack. It acts as a peg to Bitcoin. So you peg in Bitcoin into the liquid sidechain, you do whatever you need to do on the chain, and then you peg back out into Bitcoin. As you can see, this is already putting a lot of risk on the business models of the majority of altcoins out there. So as an ultra secure system that's backed by a lot of energy, space on the blockchain is like very scarce and it should be very expensive. And that's why it's not geared towards purchasing coffee. So would anyone send a postcard through a container ship, or would you send it in the mail? Anyone want to use a container ship? Yeah, so why would you buy coffee with Bitcoin? Bitcoin is the container ship. Lightning is the envelope. So there's only enough block space on layer 1 Bitcoin to handle 5,000 transactions a block, or about 250 million transactions per year. I think Visa might process 1 trillion transactions per year. But this gives you complete finality, security, and unforgeable costliness. And Lightning, using Lightning Network, you're talking at less than a cent per transaction fees. So Lightning is really starting to come into its own, and layer 3 solutions are already starting to be built on top of Lightning, even though Lightning is still in beta. So this throughput will increase, and it's always increasing as the base protocol gets more and more advanced and more developers enter the ecosystem. And in about 18 to 24 months, with a big protocol improvement, Bitcoin's utility will be increased dramatically. I won't get into the technical elements though. So Bitcoin commenced trading in March 2010. So the network was launched in January 2009. So it didn't start trading till quite a bit later. And it first traded at 10 Bitcoins for 3 cents. Fact 18. So there are currently 6 satellites beaming down the Bitcoin blockchain from space. So if you don't have internet or anything, you can set up a dish on your roof, configure it, and you'll be able to download the blockchain from space. There's a lot of mesh networking in the Bitcoin world, because Bitcoin is effectively, we exist to be skeptics of the government and try to overthrow them in the long term. And I'll show you more about revolution and overthrowing the governments a little bit later. So you can also set up a mesh network. We've got a mesh here in Sydney. So if the government tries to shut down the internet on us one day, like they do in China, we can mesh network between each other, get a satellite feed. Ham radio can be used to transact Bitcoin, and ham is bounced off the ionosphere, so you can send it anywhere in the world. So if a nuke hits Bitcoin, if you've got a solar panel with a battery and a ham radio, you're still sorted. You can still transact on Bitcoin. Bitcoin has died 377 times, and you can check it out in this link, in this obituary. So the king is dead. Long live the king. Finally, Bitcoin is the ultimate way to put your money where your mouth is. And this is the most important thing, and this is the journey of the soul. So if you object to today's state of global affairs, wild money printing and inflation, extreme wealth and income inequality, take your stand, and just by buying Bitcoin, you're taking a big stand. So that's the end of Act 1. So to keep you guys awake, this is question and answer time. So fire away your questions. Anyone got any questions? Absolutely.
Bitcoin's ability to transact blocks, it's quite a slow process.
Yes.
Now. And I also understand that miners are even paying for the opportunity to mine blocks as well. It is slow by design. And I'll tell you why. When we establish bases on the moon, will we be transacting in US dollar or Aussie dollar or euro? Probably not. We'll be using Bitcoin. And it needs a 10-minute block time to be able to relay from the moon and back. So this was actually geared for interplanetary uses. So it's not just an Earth money. This is the money for our future. So you have a block every 10 minutes. So to be really sure, to have a 0% chance of your coin being double spent, you have to wait for 6 confirmations, which will take 60 minutes. But Bitcoin is so secure, people are willing to take a 98% chance that their transaction is final, and you only need 1 confirmation for that. But if you want to be 100% sure about transaction finality, so let's say I'm sending you $1 billion. Right now, to send $1 billion, you probably have to wait a month, and you're probably going to have to pay $20 million fee or whatever it is, which isn't a lot when you're transacting $1 billion. But on Bitcoin, people move $1 billion frequently for like $6 or $7, and it takes an hour, and they're sure that after this hour, the $1 billion is in the bank. So like I said, not geared for coffee. Now, with regards to miners always face a decision. Should I buy Bitcoin or should I mine Bitcoin? So they do their numbers, and if it's cheaper for them to mine it, they'll buy their computer rigs and all that kind of stuff and start mining. But if it's not worth it for them, they just buy it. And that's why you see such a big relationship between mining hash power and price. So it always resolves around that. Is it more worth it for me to mine or more worth it for me to buy? Have you heard of miners fighting to get a hold of the blocks to mine? And they're even buying for that privilege?
It's all based on random statistics.
Yeah.
So let's say you hold 10% of the network hash power. On average, you'll mine 10% of the blocks. So it's based on a Poisson distribution. Sometimes blocks come out in a minute, and sometimes blocks come out in 20 minutes.
Yeah.
But on average, 9.4 minutes, as we've seen over the past decade. So that's why the difficulty keeps increasing every fortnight, because and it is a game of who can get the cheapest power and who can get the cheapest equipment. So right now it's mainly North America. So Canadian hydro and American wind, and Chinese coal and hydro. So whoever
the crash?
will anything.
Yeah.
So we'll see. We'll talk more about the crash and the scale of what that crash is going to be, because as a Bitcoiner, I eat a 40% crash for breakfast. Like, it's fine, I'm used to it now after all these years. But if the S&P were to take a 40% hit, it'll be the end of the world.
So you're
Literally, it'll be.
mother?
Oh, yeah.
Absolutely. So any other questions before we get on to Act 2? Yeah, absolutely.
Bit of a far out question, but since you mentioned it, what do you think the big picture is in terms of it being a tool for the future
Yeah.
and it being interplanetary? Why do you raise that?
Because unless we figure out a plan B, at least over our physical environment. So Bitcoin is plan B for our economy, and the moon or Mars are plan B for our civilization. So China's going to the moon, Elon Musk with Tesla's going to the moon, we're already looking at Mars. These things all sound
out there, but 70 years ago, flying from USA to Australia on a commercial plane was also very, very far out there. And if you just look at, you know, your mobile phone 15 years ago, did you ever think you'd be doing what you're doing on your phone now 15 years ago? So there's a lot of billionaires, you know, Jeff Bezos, they're all looking to space, and nobody will be transacting in US dollar on space, I can guarantee you. Like if it is, seems funny to me. Any other questions?
With regards to security,
yeah.
Quantum computing, where do you see it?
It's quite far away, but yeah. So ECDSA, so the elliptical curve digital signature algorithm, might be vulnerable to quantum computing if quantum computing ever happens, which I think you probably couldn't do quantum computing on an ECDSA. But that protocol improvement I was talking about over the next 18-24 months is the Schnorr signature and taproot, and that's quantum resistant. So it's 18 to 24 months away, but I think we'll beat quantum computers there.